Just bear with us a moment. I have noticed on watching Anna's screen, everything is a little bit delayed. So apologies. So if we are talking at one screen which doesn't catch up in a few seconds, and it's purely because we're running on a mobile device and not on our usual. So apologies. I'm not going to hop around too much on the charts either, because when I do, everything gets a little bit sluggish. So please bear with us. I've been focusing on the yen pairs more than the dollar pairs at the moment. As you can see, I've got the Aussie yen up here. I've got the 5-second chart up here. I was on this yesterday. Everyone's cup of tea. It does move very rapidly, as you can see. But the point about it is not necessarily from a trading perspective, but it's a great way to see, first of all, the indicators all in action in very rapid time. And the fact that whether you're on a 5-second chart or a 5-minute chart or a daily or a weekly, they work in exactly the same way. Then I've got the 1-minute, the 3-minute, the 5-minute, the 10-minute, and over onto the daily. And as always, as Anna said, the London Open, what are you expecting? We had this nice move away. It pretty much reflected what was going on in terms of across the yen complex. So what was happening on pound yen was also happening on Aussie yen, New Zealand yen, so on and so forth. And then as we get down to the London Open, which is 8 o'clock, the nice thing with NinjaTrader is it does actually print your local time. So it's very easy to highlight in retrospect exactly what happened, when and where. So this is the London Open, 8 o'clock UK time. This is the European Open, 7 o'clock UK time. You get an increase in volume here. And then, of course, as we get into London, we get a much bigger uplift in volume for the deepest liquidity. The nice move here was a nice breakaway. We had rising volume under that particular move down. Paused a bit, then we had further rising volume telling us we've got more selling. What's also interesting is this, the low volume node. We talk a lot about the support and resistance from a price-based perspective, which I'm sure you're all familiar with, which is a key plank of technical analysis, and it's a key plank of volume price analysis as well. But you can also consider support and resistance from a volume perspective, because when you think about it logically, if you've got huge areas of volume where essentially you have a lot of orders sitting there, either pending orders or you've got traders trapped in weak positions, essentially it is a very congested region from a volume perspective in terms of the orders. And obviously the greatest concentration is at the volume point of control, where the market has been sat the longest, because it is all about volume, price, and time. So that is one reason that these areas are significant. And they're significant because from a trading perspective, as you can see here, as we get down to a low volume region, what you expect as a trader is for the price to move through there fairly rapidly from a support or resistance perspective, because there is little in the way of volume sitting there to actually cause the market to pause at that region. So when you're approaching these levels, it's another facet, if you will, of using multiple time frames, in that if you have the indicator on the chart, and as Anna said, it's always the case that slower time frames will carry more weight than faster time frames. It's just a fact of life. So if you're on a 1-minute chart, the 5-minute chart will carry more weight than the 1-minute. So if you're coming up to a region, let's say you're coming up to a high volume region on a slower time frame, that will carry more weight than if you're coming up to a low volume region on a faster chart. Always got to have that balance in mind of what time frame trumps which, and it's always the slower will carry greater significance than the faster. And that applies whether you're looking at the VPA from an indicator perspective or from a chart perspective. So we move through there pretty rapidly. Then we get down to, when you've got nice rising volume, then what do we start to see as we get into the London session? Then we get a volatility trap. It's a classic, you'll see it all the time. It's associated with high volume. So you know for a fact the market makers are in here. The market snaps higher. Those traders who are not aware of what goes on at the market session crossovers, particularly London, particularly New York at 1 o'clock our time, in the afternoon. This is what you expect to see. It happens relentlessly day in, day out. If you're trading blindly without being aware of it, then you're going to get caught in these snap moves all the time. The question you have to ask yourself is, if you're in this particular position ahead of the open, then I would suggest that you close out whatever happens before that particular event occurs, because you can guarantee at least you will get volatility. It may work in your favor, but then thereafter you can always jump back in again anyway. So what is the point in taking the risk and trading through a market session crossover when you can quite happily trade either side of it once the market's calmed down? So we get the volatility snap, and the reason they're so powerful is simply it's the fear of missing out. The market moves rapidly, and volatility is nothing more than a compression of time. That's all it is, because all that's happening is that rather than this particular price move, which has gone not huge, maybe 10 pips, rather than that happening in the normal course of events, that might be 3 or 4 candles spread over this particular time frame. So this might happen in the space of 20 minutes, let's say. All that's happened is that this has happened in the space of 5 minutes. And in compressing time, that then engenders the fear of missing out in you as a trader, because your emotional response is, oh, got to get in, market's moving quickly, jump in, make some quick money, and then you get trapped in the reversal, or at the very least congestion, because what you expect with that particular indicator is one of two things to happen: either a full-blown reversal, in other words, we go from the bearish trend, the primary trend lower, into a primary trend higher, or we go into congestion, either of which is damaging. The latter more so, obviously, but sitting through congestion is painful. If you're sat in this position and you're waiting for congestion to break away, it's a painful experience. Now, it may or may not break in your favor in due course, but nevertheless, sitting through such a congestion phase, I mean, this one's been going on for what now, 5 or 6 candles, so sort of half an hour or so. That's painful. If you're not sure and the emotion is being wound up inside, that's the power of the indicator, and that's what it was developed for. If you're in a position and you get one of these, then if it works in your favor, terrific, then I would just close out, always do, pretty much always anyway, unless there's a very good reason that not to. But generally speaking, if the market snaps, you get a volatility trigger and you're in a good position, take it off the table, or at least take most of it off the table if you're trading multiple contracts. If you're not in a position, stay out, wait for the market to calm, wait for the market to break away from this particular region and start to develop more measured, even-paced price action. If you're in a position and you're in loss, then you've got a decision to make. It might get you out of jail, it might not. That's a tougher decision. So, always be aware, certainly of the session crossovers, and in particular of volatility, which you'll see across the timeframes. Not sure whether we got it elsewhere on that particular time horizon. No, we didn't get it on 3, 5. We got it on 10 down here. You can see down onto the. And we had 2 goes at it. You can see the amount of volume that comes in on the session. The trend monitor throughout that period has stayed bright red, and it's staying pretty much bright red across the piece. The 3-minute is holding at bearish sentiment, remaining at bearish. The issue you've got now as to whether you continue holding this position is, if you look over on the CSI, this is on the 5-minute. In fact, let's go over onto the multiple CSIs. I don't want to move around too much. Where are we? There we go, currency strength multiples. Hopefully these are okay. Yep, they're fine. What we're seeing right now is a real extension of this particular move. You can see the Japanese yen up here. We've got 1, 5, 10 and out to 15. So we are down on the faster time frame. You can see how overextended that is, but it's still rising. So the yen is still being bought. Down at the bottom here, we've got the New Zealand dollar, which is still being sold very heavily. It's being on 10. The Aussie also just starting to kick up a little bit on 15, but generally at the moment, the sentiment on that move is still in play. So we've still got buying of the yen, still got selling of the risk currencies, certainly in terms of the Aussie and New Zealand, and also the CAD here. You can see the CAD turning down. Now, if you were looking to get into this right now, probably not a great idea to be getting into in the New Zealand, because that's so oversold. And it's not to say this won't continue higher as well, but there isn't a lot of travel left at the moment. So in terms of getting in, I'd certainly be looking perhaps more so at the CAD yen, because you've actually got some distance that gets down into the same sort of region. So there is more to go. You can see it diving sharply here. I don't even need to look at a chart. I can tell you what's going on without even looking. Same here, it's moving quite strongly, moving strongly here and moving strongly here. So in terms of going back to our multiple time frames over here, and I'll go and have a look at the currency array in a minute as well, and you'll see it reflected there. This is where we are. So in terms of either the Aussie yen or certainly New Zealand yen, and for those of you regular, you'll know that's exactly where my eye is always drawn, the top and bottom. I'm always looking at the top and bottom of the currency strength indicator because I want to get in early. I'm quite happy to lay a much wider stop loss to allow for all this buffering that's going on down here at the moment. But if it's going to reverse, the Aussie is starting to, the CAD is still falling as we've seen earlier. The New Zealand is really flatlining down at the bottom here, and it's really a case of watching what is going on in terms of the yen. And of course, that in turn will be driven by what is going on in terms of sentiment. See what's going on here. This is on the US indices. Got the YM, the NQ, and the ES up here. A lot of divergence going on. Certainly intraday, we see a lot of divergence, particularly NQ. It was prevalent yesterday. But what you're seeing here again, and it always surprises traders, this is Globex. So this is on our electronic futures contract. Then we come into London, and you can see even on this contract, you've got a big uptick in volume, simply going through the London Open. So we get more participation, and bear in mind, as I say, the US cash markets are closed right now. Buildings, the physical exchanges aren't open, but these markets are trading electronically on a platform called Globex. It's pretty much a 24/7, not entirely, because it does close for settlement. But it's pretty much 24/7, so you can find out what sentiment is, risk on, risk off, and this is what's going on. We had a spike, and exactly the same sort of principles apply. We had a volatility trigger, ton of volume coming in, traders jumping in here thinking, oh, we're going to have more of yesterday, and Lord knows there was enough volatility yesterday, certainly with the news on the who was it? It was a pharmaceutical company. God, name's gone out. Sorry. Yeah, Moderna, sorry. The spike on Moderna, it was more like Monday Madness, as we've called it here, christened it here. So it was a repeat of last week, not quite so dramatic, but nevertheless, there was plenty of opportunity to make money in there if you knew what you were doing. But of course, what you also saw was a volatility trigger coming in all over the place. It's what you expect to see at times like that. Big uptick in volume, vol trap, and this is exactly what's going on again. Traders jumping in there thinking, the market's going to the moon based on yesterday's performance, and now they're regretting that decision. Where are we going? Well, we're probably coming back down to the volume point of control here. These levels here, I mentioned earlier on about support and resistance from a price-based perspective, which you saw on Anna's MT45, which is the support and resistance indicator. This is the equivalent on NinjaTrader the accumulation distribution indicator. The difference with this is that these are presented thicker according to the number of times a level has been tested and held. So you get this very visual picture. You can see down here, you might not be able to see the numbers here. This is 1, this is 2, this is 2, 1, this is 6. These basically present the importance of each level graphically for you and calculated for you by the indicator. So basically, the thicker the line, the more important they are. So you've got both price-based support and resistance, and you've also got obviously the volume-based support and resistance behind. So we've got the volume point of control below, lots of volume in here, decent volume under that last candle, although not huge. And bear in mind, we've got to compare volume in here just across this time slice because we're looking at London and not going back into Europe, but pretty much the same sort of price action. These are on the daily time frames. That's what's been going on in terms of the daily. Longer term on the daily, it still looks bullish for the time being, and certainly given the factors that are governing that at the moment in terms of the settlement, more or less, of the presidential election, burden factor and potentially good news on coronavirus. You know, those are all factors which are playing out right now and helping the indices, at any rate, risk on to develop higher longer term. But that's longer term. On an intraday basis, that's what we're seeing. Just go back to where we were. There we are. We're still trading around this region. The Aussie is trying to rally, but it's not really getting very far. It's still looking pretty weak. Whether that will kick down and join the CAD and the New Zealand down here, but you can see up here the yen is still continuing on higher. Just going to have a look at the array, because it's always interesting to look at the array in terms of the yen complex. Hopefully you can see that's come up. This is on 3, 5, 10, and 15. If I just isolate out, let's see, let's go down onto the slower ones maybe. Let's see what's going on in terms of the yen. There we are. Just isolate that out, let that settle. And this is what you see when and it's really, if you like, a very visual representation of risk sentiment through the prism. Currency is predominantly a risk currency. It's risk on and risk off. It has two facets, and the other currencies you'll also be looking at, obviously the Swiss yen, the Swiss franc rather, and also the dollar. The dollar is safe haven. The Swiss franc is very much safe haven as well, and then you've got the yen. So this is really giving you an instant view of weakest. So you can see down here, we've got both the Aussie yen and the New Zealand yen down here. The Euro yen is not moving quite so strongly. But the key point is it gives you so much information. First of all, it gives you the angle of inclination. This in a way is very similar to the way we use the currency strength indicator. What you're looking at is the strength of buying or selling from a currency strength indicator perspective. It's in terms of the currency itself. From the currency array perspective, it's in terms of the currency pair. So what you get is this visual representation of the strength of trend for each of those yen pairs across the yen complex. And the one that's moved the most strongly is New Zealand. No great surprise, because if you remember, the New Zealand dollar was really down, been hammered on the faster time frames and right down into the oversold region. The Aussie yen less so. Now, what you're looking for now is, if you're looking for a potential reversal, and what this also tells you is that the sentiment towards the yen is universal. In other words, the yen is not just being bought against one particular currency, it's being bought across the complex. And now what you're looking for, if you're looking for this as a reversal opportunity, in other words, for everything to move to the upside, what you're looking for is this whole array to start moving up. In other words, this New Zealand yen will start to move up. All of these will start to move up. They will start to swing around. And ultimately, over time, this whole array will move up to the top. It's like a radar, a sweeping radar effect, if you will. And the way you'll see that reflected, you'll see that reflected from the far frame. So if I isolate out here over on 3 minute, do the same on 5 minute, same on 10 minute, and that's just settling, there we are, and up onto the 15 minute. So what you will see in effect, using multiple time frames, and again, everything comes down to multiple time frames. If this is going to reverse, then you will see these start to sweep higher, and they'll start on the fastest, in other words, this one, which is 3 minutes. So you'll start to see all of these start to see them lift off the bottom and start higher. That will then ripple over into the 5 minute, ultimately out to the 10 minute, and finally, of course, 15. And if it is a reversal in the trend, in other words, a longer term shift in sentiment, then of course, you'll see that reflected on the charts, but you'll see that reflect over here, because this will ultimately move all the way up to the top here. In addition to that, the second column here also gives you a representation of, or on the ladder, of whether a currency pair this time is actually moving to an oversold state or an overbought condition. And you can see these little cells down here. They're in a darker color and they've got the brackets on. They are telling you that this is moving to a condition of oversold potentially. And when they arrive at either oversold or overbought, they'll appear as bright red or bright blue. So if this is going to change up here, Euro New Zealand, for example, up on the 15-minute, if that is going to become overbought as the pound New Zealand, then those will ultimately change to bright blue. And similarly down here, if the New Zealand yen is going to reverse, then it will ultimately change to bright red. At that point, you'll be off to the charts, be looking at those opportunities, potential reversal opportunities from either end of the spectrum. And what this also tells you, because you've got these New Zealand pairs up here, it also tells you about New Zealand, because what it's telling you is that the New Zealand is very, very strongly sold at the moment, because this is the counter currency. So from a New Zealand perspective, I'm not going to change out because I don't want to overload the system too much. But if you flick this over onto New Zealand and isolate out New Zealand pairs, that is why you're seeing all these New Zealand pairs gathering at the top, and you've got these gathering at the bottom: New Zealand dollar, New Zealand Swiss, New Zealand yen. So you're looking at it from both perspectives the whole time. You're looking at the perspective of one currency against another through the prism of the particular pair that you are interested in. Let's just go back onto the chart. Let's see where we are. Okay. This is basically basing. You're starting to see the Aussie recover, but what you're not seeing at the moment, the reason you're not seeing any particular strong movement or strong trend develop is purely because the yen is now climbing, and it's climbing with the Aussie. It's climbing with the pound. It's climbing with the Swiss franc. So if you go and look at any of those pairs, there's not going to be a strong trend purely because they're moving in the same direction. Where you will see strong trends right now is you'll start to see, obviously we've got very strong selling of the dollar here. We've got very strong selling of the CAD, of the Canadian dollar. So if you went and looked at something like, let's say, the Aussie dollar, the Aussie is rising, the dollar is falling. So you would see a decent trend there, perhaps on cable as well. Pound is now starting to be bought a little bit, it's rising, but the strength is in the dollar. And if I go over onto the dollar matrix, just finally before we wrap up, there we are, currency majors matrix. So what you expect to see with this strong selling of the dollar is you want to see, obviously, cable is rising. You can see it here, the dollar is selling. So the dollar is pretty much driving things at the moment. But look at the dollar CAD, this is on 5-minute. Why is the dollar CAD not moving? Because the dollar and the Canadian are falling at the same rate. So there's absolutely no trend there. Why? Because they're traveling in the same direction. It's the analogy I've used so many times is of two trains. You've heard it many times before. The two trains leaving the station. I'm sure you've sat on a train and there's another train comes alongside. It's exactly the same principle here. If you're going in the same direction, doesn't matter whether there's a bit of differential speed, you're not going to see a strong trend. And that's why the dollar CAD's trading around the volume point of control, because these two are moving in the direction. So you're not going to go there to look for a trend. Where you are going to look for trends is on the Aussie dollar. You can see it here, it's spiking up. You've got a nice trend developing here. We've now broken away from the volume point of control. You can see the trend monitor here is starting to transition. And this is the other thing. Obviously, the trend monitor here on cable has changed to bullish. We've got bullish change here on Aussie dollar, which is fine. On euro dollar too, we had the rally, but the euro is starting to weaken. And that also is now traveling in the same direction as the dollar. So you've got congestion on euro dollar. In terms of dollar Swiss, what have we got? Well, we've got the dollar moving lower, and we've got the Swiss kind of, yeah, we've had a bit of a trend, but it's now moving to congestion. What about New Zealand? New Zealand is starting to pick up pace. So in terms of New Zealand yen, yes, you would see a little bit of movement, but the yen is still climbing here and it's flat, but it's well up into overbought. So at some point that is going to roll, but maybe it's not quite ready yet. You'll be looking at what's going on in terms of the VIX. The VIX is spiked up to 23.01 at the moment. So that's rising. And that's what is reflecting the fact that we've got the yen buying, which is going on right now. So it just gives you a complete picture in terms of using multiple timeframes, whether that's applied to the charts or whether that's applied to the currency strength indicators, or indeed any other indicators the currency array is using it in multiple timeframes in this way. Right, I'm going to wrap up there because I think we've gone way over time. Apologies for that. I'll just point you over to where all the bits and pieces are. This is the education program that Anna mentioned earlier on. This is the complete forex trading program, which you can find at quantumtradingeducation.com. And as she said, we now have the forex funded program, which you can find just by clicking on the link here, and it'll take you to this page. But essentially what it will give you is the opportunity to trade our money up to, as Anna said, $1 million. There's no risk to you. It's not your money. What I do have to say is this this opportunity is only available to our students on the Quantum Trading Education Program. But if you're a quantum trading software customer, you have indicators and you want to join the program, you're more than welcome, and we give you a credit for whatever you've spent with us so far. And then that gives you the opportunity to join the Complete Trade Program and also access to the funded program. As Anna said, it starts at $5,000, goes all the way up to $2 million. The best part of all is, first of all, there's no risk. And secondly, as it says here, you profit directly from your newfound trading knowledge. So you put that knowledge into practice, you profit from it accordingly, and wherever that wants to, you want to take it. If you just want to take it as an opportunity to trade a much larger account, we have created some very conservative risk and money management rules. So you're trading in a safe environment. It will teach you how to trade larger sums of money. And ultimately, if you wanted to go this far, it will give you a solid track record, not only to move into a full-time job, if that's where you wanted to go in terms of proprietary trading, you can then take that track record and show it to a potential employer, and they would take you on as a trader. Alternatively, you might decide you want to set up your own fund based on your experience. You can take it whichever way you want. It's entirely up to you. And the best part of all is you keep your trading capital. You can trade your own, continue trading your own account, but you have access to a much larger opportunity in terms of funds, which, as I say, are no risk to you. So you'll find all the details there. And obviously, if you're a quantum trading student, you'll find a much more detailed page inside, and all the buy buttons will be there as well. This is not available, as I say, to non-students, purely because that's the way we've launched it. We want to give our students the opportunity for an upgrade path to put their education into practice. This is where you'll find annacooling.com, all the books up there on amazon.com, in Kindle and in paperback. And finally, over onto the quantumtrading.com. This is where you'll find all the software, all the indicators, MT45, NinjaTrader 7.8, and TradingView. We will be launching TradeStation very soon in both versions. That's the 9.5 version, which is the relationship between TradeStation and Interactive Brokers, where you can trade through that particular arrangement, or through TradeStation Securities, which is version 10 and above. So that will be coming very, very soon. And once we've done that, we're going to drop back onto TradingView and port across all the indicators that are missing there, particularly the forex specific ones, so that that package will then be aligned with MT45. The reason we couldn't do it before was because we didn't have the opportunity with the Pine script. In terms of object and line drawing, we do now. So we're delighted that we can actually get onto that job and complete that particular package. And if you have the full package of TradingView indicators, you'll get all those indicators added free of charge. So it's a big bonus. If you've not invested in it yet, might not be a bad idea to buy it, because at that point we will uplift the price to align with the MT45 package. So that's it. Thank you very much indeed for coming along today. I hope you've enjoyed it. I hope you've learned something perhaps you didn't know before. And we will be back later on this afternoon at 3 o'clock for the US session. So we will see you then. Enjoy the rest of the trading day. And if not, we will see you again next week. So thanks for coming along today. See you soon, and bye for now.